Hello, hello. Thank you for joining me for Java. This is Friday. It's May 31st, 2024. This is the last trading day of May. So, wanted to start with a couple of the major threats that we are facing. The first is we've got the federal debt bomb as a percentage of GDP. This is from the Congressional Budget Office or CBO. It is unsustainable for the United States. So it is also increasing. And then the second threat we are facing as a bomb is actually a bomb. We'll go into that a little bit later. So let's get started. Looking at our main risk indicator, the MMRI is at least out of the red zone. So pullbacks the market had yesterday is kind of giving it a little bit of a breather. The big question is, do we continue? Well, large part of that is going to be how the PCE numbers come out prior to the market open. So looking at fear greed index, we're heading into the fear territory. So two drivers, the market, it's all psychological for these prices. So it's either fear or greed, and fear is the stronger of the two. So the moves tend to happen much more rapidly. And I'm telling you this just so you can be prepared. So with this, we are watching the 10-year yield rising, as well as the relative strength of the dollars. When these two go up, it's pressure on the stocks and they go into the red. With this, we have actually cryptocurrencies getting inflows. So their prices are going up. We've got the Ethereum ETF that is getting a little bit closer to coming out. So giving a bit boost. Also, Bitcoin, some people are moving their money there as a safe haven. So if we are looking at the currently situation with stocks in the red and the futures are also in the red, we've got oil is coming back, and that is on a couple of things. We've also got the OPEC Plus meeting coming up, in which they're expected to still be constraining supplies. So if the price of oil and demand, more importantly, not just the price, but if demand is coming down, it's just a major indicator of a truly weak economy. So, for the sentiment today, very mixed, very volatile. Keep an eye on the 10-year yield and the relative strength of the dollar. As these go up, you're going to watch some pressure in your stocks in general coming down. I do expect some singular movers. So, right now, as I said, both of those relatively neutral and just kind of, as it says, idling around prior to the Fed's numbers coming out. So, calendar today, we're getting the personal income spending, the big one, the PCE at 8:30 in the morning, core PCE, and then 9:45, the Chicago Business Barometer, which really is not, I don't expect that to be as much of a mover. So we have, these are earnings from yesterday and prior to market. Why do I have them up? I just mentioned there are some individual movers, and I think some of these are going to be dependent on what happened. So Dell got hit pretty hard yesterday, and that could follow through to some of the chip stocks, artificial intelligence, and technology. We had Costco, who on the other side did very well. So we'll see how things continue through today. So we heard from Fed President Logan, and she's saying the policy, the Federal Reserve may not be as restrictive as it's believed. So saying the interest rate, neutral interest rate is probably higher. Basically, they're saying they're, in a nice way, they're losing control and the rates are kind of taking on a life of their own. This could increase volatility, and they are going to try to manage the fear greed, which is the larger driver now, through their Fed speech. So we're going to watch a lot more Fed speakers come out if the volatility increases. We've got a few scheduled. And if anything major happens, then don't be surprised if all of a sudden we start hearing from more of them. So back to oil, we had ConocoPhillips. Basically, they okayed their claim against Venezuela. So that's giving a positive move for oil, as well as the expectation that OPEC Plus will keep the supply low, which increases the prices. So what are we watching? Euro area inflation rising more than expected. Well, more than they expected. We know inflation is still continuing. If you look at everything else across the board and you're not denominating strictly in dollars, you understand that it's an inflated money supply, or rather an inflated currency supply. Real money is gold and silver, and that is staying basically stable in terms of trade value. So we've got this is the 10-year yield. And looking at the volatility of this and continuing to increase as it looks, unless it breaks this trend right here going up, you're going to watch continued pressure in the stock market. So just keep your eye on this. So we've got Japan trying to manage their currency issues. It found out they spent a record $62 billion intervening and trying to kind of bolster the Japanese yen. And we've been talking about this because they own a large amount of the United States debt treasuries. Well, if they're spending money trying to save their own currency, they're not purchasing US debt either. That's why our treasuries, the sales didn't go well. The yields have to continue up, and as these yields increase, puts pressure on the stock market. So, other couple of things. PayPal coming out with a new stable coin. They're basing it on Solana for that layer 2, and they're saying they're offering confidential transfers. So I want to look into this a little bit more. Perhaps my friends, staff, and PJ, if you take a look at these, I want to know a little bit more about this and if they are indeed confidential. I don't know that I can accept that with PayPal. However, it's a move and shows that they are looking at the right, basically what people are interested in, which is their privacy. So MasterCard, their crypto credentials, this is peer-to-peer pilot program going live. So this is basically a direct trade outside of having to use banks. So watching these trends, I find that very important moving over to cryptocurrency and blockchain. These are basically strengths that they have if currency is replaced. So what are we looking at in the real economy for America? We've got more stories coming out. The dream that got away, cost of living nightmare. This is because there is a huge divergence happening. So they're saying US economic growth last quarter revised down, but consumers keep spending. Not exactly true. We've got Kohl's is a department store, kind of middle class department store. They're down. Inflationary shoppers pulling back, and this is sinking their sales. So what we're watching is the middle class going down to the bottom. The wealthy are still spending, however, the rest are all dropping. We've got pending home sales dropped yesterday, largest in 3 years, also not a surprise. Home equity, as prices come down, there's less home equity, and underwater mortgages are surging, which will lead to more foreclosures. So, what are they doing to fix this? They're offering the same thing that caused the crash the last time, which is zero down mortgages, making a comeback in the United States. So, what are these? These are actually not zero down mortgages. What they're doing is they're giving two loans. So, they're giving a loan on the main mortgage and then they're giving a second loan for the down payment and doing zero interest on that down payment. And they're just putting the payments on the end. But very dangerous thing here. And we're watching it come back. And it's going to the highest risk in the area looking to purchase homes. So on the other side, we're watching the current administration in the United States allowing Ukraine limited use of US arms to strike inside Russia. Spoke about this yesterday. We've got Berlin saying that Ukraine may use German weapons to strike targets inside Russia. They're not going to like this or allow it. They've already said they're going to strike back. We've got the Irish economic model as challenged by China. They are restructuring a lot of the trade. They're doing direct trade in yuan with rubles, and then they are also trading in the Basically, they're foreign reserves, international currencies. So they're talking about the Cold War as a cakewalk compared to current situation, and this is all the currency wars that are going on. Currency and trade wars are really going to take the forefront as far as the East. So we've got the United States, this economist saying that risking forever trade war with China. I agree with this because not structuring at the moment any good trade agreements. So what is the solution to this? Stacking real assets. This is precious metals, gold, silver, stocking food, ammo, anything that is tradable that other people will want in the future, especially if it has a long shelf life. So I want to bring up this story between OpenAI saying it disrupted Chinese, Russian, Israeli influence campaigns, but they're saying that they failed to gain traction or reach large audiences. There are ways around this. You can teach people to go around this influence that they've got. You can, as we say here, basically become free. How do you do this? If you've got the space, you can raise farm animals. Chickens are my favorite in the space, especially with this recent chicken cough they're trying to push on anybody. Growing gardens, growing your own food, even a small amount, and a couple of house plants. Become proficient in protecting yourself and your loved ones, and growing your own medicine, your pharma, which is what we've been going over. So with this, thank you all kindly for your time. And until I see you again, my friends, stay free.